Hi, thanks for tuning in. This is the weekly chart analysis for the week ending 13th of February 2026. First chart is the US dollar index futures. They closed lower this week. We sort of anticipated last week that the market was unlikely to be strong enough to recover back above this level, and price did pull back in response. It came back to the next level and recovered very slightly off the lows for the week. Volume remained about average, so it was genuine trading with no anomalies. This market's now looking a little weaker than stronger, despite the increased strength we saw emerge here. If the price can only push up one up bar with a reduced spread, it's showing you that it's not particularly strong at this point in time. It'll have to gather up some increased strength or find some momentum to move higher. If not, it's probably going to go sideways to down, at least in the near term. A lot of the associated markets were in consolidation mode this week, as you'll see as we move along. This is the E-mini S&P 500 index futures. They've traded inside the previous bar's range for the entire week on reduced but still about average volume. This is a consolidation bar of some degree in response to what is a mini shakeout last week. It does open the door for a push higher. The market's not looking particularly strong. I've been saying it for a while. It's just moving sideways through here and not really showing any serious strength. And that being said, there's no great weakness being seen either at this point in time. It does concern me, though, that if some weakness was to emerge and it had some bite to it, some decent volume along with it, this market wouldn't be able to stand up and would fall over pretty easily. It's not looking particularly strong, but without any great weakness in the market, it's not looking particularly weak at this point in time. I would like to see it push higher and show some strength, but at this point, it's just moving sideways. This is US Treasury 10-year note futures, and they did push higher this week. The market had really only just been holding on down here and was reluctant to break down. It does appear that it's been successful at this point in time because all of that weakness through here, the market's pushed above it this week, perhaps leaving it behind. The market's pushed almost up to the highs of the range in here. There's been no attempt to break through the overall highs of the range. But at this point in time, the market has done a good job to recover and close above all of this weakness through here. And it does look as though it may push up to this highs of the range through there. Now, after a breakout like that, you'll generally see a period of consolidation, at least initially in here. You want to see it high up within, you want to see the period of consolidation high up within the range of that push higher and form somewhat of a little bull flag in there in the classical sense. So a little period of consolidation, preferably relatively short in duration and relatively shallow in the depth it pulls back. And the depth and duration, the shorter and more shallow it is, the greater the inferred strength of the market. So a short, sharp pullback and then a push higher suggests the market is far stronger than a deeper and more prolonged pullback. And I would expect an attempt to consolidate like this, probably high up in the range, and if selling pressure is found to be low, probably a push up to this level in response. The next chart is copper price futures. They've also traded within the range of the previous bar this week. I'm going to be saying that quite a lot because most of the market did, or at least a great deal of it. It's traded as an inside bar all week on reduced and about average volume. This is consolidation taking place. The consolidation is really taking place right through there, and it's taking place just below the highs of the range. And if that period of consolidation is successful, the market is likely to make a serious challenge to break out above the highs of the range, which have been a limiting factor for some time. It's always a difficult job to do, to break out to a new level like that. The market's doing a good job in consolidating sideways. It's in a relatively tight range, and it's not looking like it wants to break down at this point in time. There may be an initial test for supply early in the week, but I'm expecting an attempt to push higher in response, especially if there's continued weakness in the US dollar. Gold price futures, they did test for supply early in the week this week and then pushed higher. There was very low volume this week. I did wonder if it was incorrect, but I checked a couple of sources and it appears to be correct. So the market has tested for supply below the previous bar's close in there for a portion of the week, and then it's floated higher on relatively low volumes, and it's still traded within the range of the previous bar for almost the entire week and closed just a little higher for the week. It's really floated higher on a lack of selling pressure rather than any great amount of demand or increased demand. Doesn't look particularly weak, but it doesn't really infer any great strength either at this point in time. You'll note that the high of this bar is almost exactly where the market's closed. So it's almost like the highs of the range, if you like. It's a bit awkward with this supply bar in the way on very high volume, but it's kind of like the highs of the range. And you might well get a test for supply again initially. And if supply continues to be low like this, there will almost certainly be an attempt to push higher in response. Silver price futures. Silver price futures also traded within the range of the previous bar this week as an inside bar. Volume was quite low in this market as well. This market is respecting the lows of that bar, which is this high volume bar. There was sort of a shakeout in the bottom half of that bar last week. This is an awkward looking bar with a strong push higher and a strong push lower, and then a mid-bar close. But this week's bar closed as a slight up bar, trading within the range of the previous bar. There was a little test for supply below the previous bar's close in there, an attempt to push higher, and then a fade lower. So this is consolidation taking place. If the consolidation is successful, it'll attempt to push higher in response. It may not be successful to do that, but it'll attempt to do so. And that's where we are at this point in time in this market. There's been serious demand in this market for a while, and this is the lowest volume we've seen for many weeks. So perhaps some of the air's been taken out of this market, at least in the near term, following this weakness that emerged here. That being said, this weakness emerged, it looks really serious. Prices really only pulled back to here in response, and it stayed there. So that in itself is quite strong. This is the energy sector, light crude price futures. And the market pulled back this week, traded within the range of the previous bar for almost the entire week. 3 weeks ago, price pushed up to the highs of the range, of this range in here. And the last 2 weeks have seen the market consolidating in response, which is exactly what you would expect to see. It was a pretty good move through here to get past all of that weakness, push up to the next level. And now that needs just some time to consolidate in here. That's exactly what the market's attempting to do at this point in time. Volume reduced to about the average this week. So activity was a little lower. And I won't be surprised to see an attempt to push up, probably just to the highs of the range initially. If the market really gets some momentum going, there may be a challenge to the highs. But at this point in time, I think the market's more likely just to recover up to this level in here. and perhaps close at that level like that. Into the currencies now, remembering that the US dollar was weaker this week, so that allows these markets to push higher to some degree, trading the inverse of the US dollar. You have to say that it was a bit of a weak bar this week. Price did push up to the highs of the range. Spread wasn't particularly wide at all. Mid-bar close, inferring that supply was drawn out here, which I guess is what you would expect with the market challenging the highs of the range. It wasn't a particularly strong bar. It was a weak up bar that did draw out some selling pressure that left the market under pressure to some degree. See what the pound's doing. The pound, similar to a large degree, which is what you would expect. It was a weak up bar. Volume was reduced, but it remained a fraction above average here. And on that, the market actually traded with a mid-bar close, narrow spread bar within the range of the previous bar. So that wasn't a particularly strong bar either. There was weakness inferred here, a pullback in response, and then a weak up bar. It's not particularly good sign, to be honest. And this market didn't even challenge the highs of the range like the euro did. Japanese yen currency futures, they really did push higher this week on increased volume and above average volume. Pushed up, closed pretty much at that breakdown line there. You would really expect to see a period of consolidation in response prior to any attempt to continue higher. Is this level here almost right with the level the market closed at this week? So that forms like a complex low through there, where the market has two levels that it has to contend with if it's going to push through. And markets will often pull back rather than just charge through or attempt to do so, pull back almost like they're getting a run up and then make a crack at it. But at this point in time, I expect the market will consolidate probably in there like that initially, and then it will respond depending on how much supply is drawn out. Aussie dollar currency futures have been very strong more recently, and they've attempted to push higher and above the highs of the range. Here's the highs of the range through here. You can see the market has closed off its high for the week on pretty good volume. It was reduced volume, but still well above the average. This market has shown strength since back here. We noted it at the time the market was looking stronger, and it pushed higher. It's come up to challenge the highs of the range. Took a couple of weeks to do so through there, and now it's attempting to break out again. The next level higher is right up here, so it's going to take a little bit of work to get up there. I would expect with that bar showing signs of supply being drawn out that the market will consolidate in response back at the highs of the range here prior to any attempt to continue higher. It'll just depend on how much supply is drawn out when the market comes back as to whether there is an attempt to continue higher or whether the pullback is a little deeper before there's any attempt to push higher. Bitcoin futures. Bitcoin futures traded in consolidation mode this week after gapping lower last week and effectively locking in anyone who bought through here to a weak position. You see prices gap down below the lows of the range to the next lower level. This week, price traded inside the previous bar's range, pretty much at the same closing level. Volume reduced considerably to slightly below the average, so activity was lower this week, and there was likely reduced selling pressure. I expect an attempt similar to the attempt here to consolidate sideways here. This previous attempt eventually failed, so we won't make any great predictions at this point in time, but the market has pulled back to the next level, and the market's probably going to attempt to consolidate sideways here and recover from the ordeal it faced last week when it gapped down. It did close well off that week's lows, so there was buying support emerge, but the fact price gap down shows there was some intent on pushing lower last week. So just be careful here and watch to see if there is further signs of consolidation taking place. At this point, the market has shown signs last week with the close well off the week's low and then a narrow spread bar pretty much sideways as an inside bar this week. That's a good attempt to consolidate, but it's got a long way to go. It's probably got a period of time in here where we need to watch the market and see if strength continues to build. Just back to the US dollar index futures quickly. You can see the market pulled back this week. It did close just slightly below the previous bar's low. So that's some minor weakness. Any strength that was inferred here doesn't seem to have been expressed higher here. That was a weak up bar last week compared to this bar inferring strength. The market appears to have failed at this level, which is sort of what was expected anyway, and the market's pulled back in response. There may be an attempt to consolidate sideways sort of through here, but any ongoing weakness will probably see the market come down and test this level for strength. That would be pretty serious. So watch carefully. This market affects so many of the other associated markets. Okay, thanks for your time. Now I'm going to be interstate for the next 2 weeks. There probably won't be any weekly charts for the next 2 weeks, although if some sort of serious event occurs, I'll try to pull something together. If not, I'll be back in 3 weeks' time. Thank you very much. See ya.